give me your best and worst case scenarios for the economy and then for private lending in real estate.
I think best and worst case is largely going to depend, as I mentioned earlier, on how long this pandemic lasts, how soon people are able to get back to work, and also how much stimulus the government continues to pump into the economy. I can see in a worst case scenario, unemployment going up north of 20%, businesses shutting down and going bankrupt permanently, and a much longer recovery time. So I think towards the beginning of this pandemic, people were kind of expecting a V-type recovery. We shot down, we were going to bottom out and kind of shoot right back up. That later changed to maybe a U-based recovery. Some people have speculated it could look more like an L-shaped recovery. From a worst-case standpoint, I definitely think that there is a worst-case scenario here that we're all turning a blind eye to. But I think ultimately a lot of that can be abated by two things. One is getting people back to work, and two is the government continuing to pump stimulus into the economy. If the government does not continue to pump stimulus into the economy, then we can pretty much kiss that goodbye. And it needs to be broader than what they're doing now. So again, the government reacted quickly with their PPP loans and their various SBA loans to help different types of businesses, but ultimately there needs to be help to landlords and mortgage companies. We've seen some help to mortgage companies. We've heard whispers and rumors and potentially some help coming to loan servicing companies, but there really has not been any help for landlords yet. And I think the issue there is that the public sentiment is that if you're a landlord, you're wealthy, so why should we help you? But ultimately what's happening is you're asking the landlord to essentially subsidize what the U.S. government should be doing, which is helping their tenants to pay their rent. And we deal with a number of borrowers, all different shapes and sizes, and we've kind of heard stories from A to Z in terms of how they're doing. We have some people that say that they're still managing to collect 80 to 90% of their rent, and we have other borrowers that are telling us they're essentially down 80 to 90%, only collecting 10 to 20% of their rent. So there needs to be some sort of a policy or program put into place that is ultimately going to support the landlord and ensure that these tenants pay their back rent. Because what's happened so far is we've had public officials come on TV and say, don't pay your rent, don't pay your mortgage. And ultimately, if these landlords can't collect their rents, not only can they not pay their mortgage, but they can't keep up with maintenance, with property taxes, utilities, insurance, and a number of other things that need to happen at these properties. So it's a very slippery slope and a dangerous cycle there. I'm hopeful, given the current administration and how heavily vested they are in real estate, both directly and indirectly, that at some point they will kind of open their eyes to this issue and come in and support those landlords, which will ultimately help everything get back to where it needs to be. But if it doesn't, then the worst case scenario is, unfortunately, you're going to have a relatively large pool of borrowers that cannot meet their mortgage payments, that may temporarily have executed forbearance agreements with their lenders that do not forgive the payments, but ultimately defer the payments 30, 60, 90, 120 days, but they still owe that payment. And if they don't collect their back rent or get some sort of support, kicking the can down the road, it's going to be impossible for them to pay those back mortgage payments, and you're going to end up with a pile of foreclosures that could otherwise be prevented. And then as far as private lending and real estate, I mean, I think the short answer is there really is no best or worst case. It's all relative. It all depends on your point of view. In my mind, I thought that the space was getting a little too crowded to begin with. I thought that because of the influx of capital in the space, you were getting so much yield compression that this asset class at a 5, 6, 7% rate no longer makes sense from a risk-adjusted standpoint. I guess the worst case scenario is that you have less capital in the space, which just means higher rates and less competition, which from my perspective as a lender is not necessarily a bad thing. It just means that we almost push the reset button and we go back to where lending was in 2016 and 17. It's a more niche business and means a little bit less volume but larger margins. So I think from a private lender standpoint, neither here nor there.